Yeah, we've had ours.
Okay. Perfect. So, just a few words. To begin with the program objectives, and this is this is what we try to get across in the MSc Finance. And to begin, it's the understanding and the functioning of capital markets. Now, we will do this by exposing you to the latest thinking in financial economics. There's going to be some particular emphasis on portfolio theory, asset pricing, corporate finance, and risk management. These are going to be these last four, these are going to be some core topics in the master. Now, you will be trained to develop analytical, but not only analytical, also quantitative techniques to evaluate risk and to develop solutions to financial problems. So this opens a whole topic, a whole chapter regarding the MSc Finance, which is its nature. And the nature of the master follows the nature of finance itself, which is quantitative. So one of the things that applicants sometimes are a bit confused about is the distinction between finance and accounting. Perhaps this is due to the fact that undergraduate programs most undergraduate programs worldwide teach finance together with accounting. But this is, so often the confusion is therefore that finance and accounting are pretty much the same, but they're not. If you want to think about it this way, finance is pretty much everything economics is, except it looks at the financial markets. It uses the same tools, the same instruments, the same theories. Pretty much everything is the same. Of course, it's specialized to the study of financial markets, but really has not much to do with accounting itself. And that's something just wanted to make clear right at the start. Now, we restructured the program last year, and we had it running 2019-2020 in its new form for the first time. And here I'm going to show you two of the three streams we have. We have three streams, currently offering two, but if the numbers are there and there's a request, we can activate a third stream, which is not listed here, which is in risk management. The two streams we currently offer are the streams in capital markets and financial management. Now, these streams are pretty much similar. After all, it's still an MSc in Finance. I would say the main difference between the two is that financial management is more qualitative stream, is a more qualitative stream, as opposed to the capital market stream, which is more quantitative. Now, you don't have to choose which stream right at the start, because in the first semester, semester one, you will take all the same set of modules, and they're listed here. So you will have 5 modules: introductory econometrics, financial statement analysis and ethics, asset pricing, financial markets and derivatives, and corporate finance. And once again, I want to draw your attention to the fact that financial statement analysis and ethics is the only module which deals with accounting. None of the other modules deals with accounting. Now, some of the other modules, especially in term 1, corporate finance, and some of the modules in term 2 may require some basic knowledge of accounting, but we don't deal with accounting, okay? We need this module in semester 1 just to make sure that we all know what we're talking about. But that's pretty much everything, all we do pertaining to accounting. Now, Another element I want to draw your attention to is this other module, the first one listed in semester 1, Introductory Econometrics. Now, maybe not all of you are familiar with what econometrics is, but econometrics is pretty much like statistics. So we have one module in semester 1, and then 2 more modules, financial econometrics, Monte Carlo methods in semester 2 in the capital market stream, and 1 applied econometrics in the financial management stream. So the quantitative side of finance is taken by these econometrics modules, and they're really fundamental. So it's pretty much all the other modules, especially those coming in semester 2 and the summer projects, they rely on your econometrics foundations that we provide in semester 1 and we continue refining in semester 2. But they are like load bearing. Huh? Semester 1, then we offer 3 more modules: asset pricing, financial markets and derivatives, and corporate finance. So this semester, the first semester, is common to all students. And then around December, beginning of January, you are asked to choose between the 2 streams. So you're asked to choose between either capital markets or financial management. Again, the 2 streams cover similar material, but in a slightly different way. Now, they're not totally different. To begin, both streams have in common these 2 modules: portfolio theory and financial risk management. So portfolio theory, it's a must if you want. How to construct efficient portfolios, how efficient portfolios behave in practice. And it's also related to asset prices. In financial risk management, you will be exposed for the first time to the management of risk. And again, this is also a pretty quantitative module. And then your choice of stream will allow you to choose between financial modeling, financial econometrics, and Monte Carlo methods. These 3 are fairly quantitative modules. Or you can choose between international finance, strategic finance, and applied econometrics. Depending on the stream you choose, then you will have a slightly different research project module. Now, these research project modules, they are delivered in the summer. They're currently, right now, we're delivering them. And they are weighted twice as much as any other module. Okay, so this research project in capital markets counts as 2 modules of semester 2. The same is for the research project in financial management, which counts as 2 modules in the financial management stream in the second term. Okay, so again, the choice you can, and often students come with the idea of, opting for the capital market stream, and then after semester 1, they get more familiar with what the content of the modules are, and so they switch or they change their mind and opt for financial management stream, and vice versa. Now, again, just want to draw your attention to the word research project common to both summer modules. The word research there means that these are not just projects or assignments or analyses or reports. They are research projects, which means they require use of quantitative techniques. And these quantitative techniques are the ones you will be taught in the econometric modules. In semester 1, introductory econometrics, financial econometrics and Monte Carlo methods for the stream in capital markets, and applied econometrics in financial management. So all these quantitative methods we will expose you to, then you will apply in the research projects. Now, regarding the entry requirements, these are the same as the ones you can find online on the MSc Finance webpage. So it's a minimum second class. Sorry, somebody just joined. Okay. Degree in, so we require business-related discipline with good content of finance, economics, econometrics, maths, and statistics. Now, it doesn't have to have all of them, but it's important to have exposure to have had exposure to finance to some extent, or some math and statistics. Now, sometimes we take into special consideration students who have not been exposed to finance, economics, and so on and so forth, so who don't satisfy specifically the entry requirements, but they have obtained high marks in quantitative modules. An example that comes to mind is students from physics. So students from physics, they don't know much generally about finance and economics, but their quantitative background is particularly strong, and so we take them into considerations, and we had successful students in the program with those characteristics. The third one is really rare. So these exceptions that we make for applicants who do not meet the entry requirements by small margin but present a strong case through relevant experience, they're becoming more and more rare, because it's really hard to find relevant experience in students who graduated and had a few years, or who worked for a few years. It turns out it's a bit easier for older students. So again, the entry requirements are not binding, totally binding, but they are pretty fair guideline to make up your mind and see. Again, these requirements are not there for fun. They're there to help you understand it's needed by the MSc Finance. For the application, what you have to submit is an academic transcript for each and every year of study, a personal statement, and your CV. Also, if you're a non-native English speaker, you must also submit evidence of somebody has the microphone open. Okay. If you're not English speakers, you must submit evidence of competence in English language following the requirements. Now, in the MSc Finance, again, because of its nature, which is fairly quantitative, we don't have lots of group works or group assignments. So in the MSc Finance, the English language requirement, it's not as strong as for other masters offered by the business school. So we have a slightly lower entry requirement pertaining to the English language, okay? Just because we don't have so many projects which require you to work in group. And the application, again, you can apply online through the Postgraduate Application Center, PAC, at this address. Should you be interested in what are the potential career for graduates in finance? Well, pretty much everything, ranging from investment banking, investment analysis, portfolio and or wealth management, corporate finance, risk management, commercial banking. Now we have an affiliation with GARP. So should you be interested in, particularly in risk management, we do offer one module common to everybody in semester 2. And that risk management module does cover pretty much exams 1, 2, and part of 4 of GARP. So it's pretty condensed course. Here I put some logos of current employers of our past students. And I'll be happy to take any question you have.